Hey, it's Garth Jones with Keller Williams Suburban Tampa, and I wanted to talk to you today about escrow analysis. It's January here in Tampa, and that means a lot of us are getting these letters from our mortgage companies that are telling us what our new mortgage payment is going to be, and it's very distressing because a lot of times they're going up. These mortgage changes are based on an escrow analysis. Escrow money is used to pay for your insurance and your property taxes. And how the mortgage lender, we're going to call them the bank from here on in, how the bank gets these numbers is they take a look at what they spent last year when they wrote the check to the insurance company and they wrote the check to the tax collector, I should say, and they look at what they did in the year before that and the increase between those 2 years. Let's say it was 10%. So now they're going to project for 2023 that your costs are going to go up again another 10%. So they use those projected costs for 2023. They add the taxes and the insurance together. They divide that into 12, and then they multiply it by 2 because they want to have 2 months as the minimum balance in your escrow account at all times. So that's our 2023 minimum escrow balance. And they say, okay, if we use last year's escrow payment all the way through 2023, and we have these new projected costs for 2023, what does that look like if we don't change the escrow payment today? And then that shows them where the minimum balance is going to be. And sometimes that minimum can actually be negative, especially if taxes are collected in November. But if your insurance is collected sometime around that same time, these monies get drawn out of your escrow account and your minimum balance could be not only zero, but it could be negative. And so they take that minimum escrow balance projection for 2023 and they take that 2 months, which is the minimum that they're going to allow, subtract one from the other, and that difference is going to be your escrow shortage. Now they take that escrow shortage, they divide that into 12, and they add that to your principal and interest payment, which is fixed. It will never change during the term of the mortgage. Your escrow payment will change. They add that new escrow payment to the principal and interest, and that's your new payment for 2023. Now, some banks will allow you to send a check in that will reduce that escrow shortage, and they'll reproject and they'll give you a new payment that's relatively close to the payment that you're making today. Now, some banks will not let you do that. They will increase the monthly payment that you owe them to ensure that they have enough money in the escrow account at all times, and your payment goes up. So, hey, Garth Jones, Keller Williams Suburban Tampa. I hope this helps explain where these changes come from, and thank you very much for watching.